Camera for Canada's Mortgage Minute on Monday, July 15th. Hey, we're always reading the tea leaves around here, and we're always looking for information to point us in the direction of which way the market's going. And basically end of last week, Canadian home prices had advanced at the slowest pace in almost 4 years, led by a decline in Vancouver, according to TerraNet National Bank's Composite Home Price Index. Basically, they measure strength across all the major cities, and prices across 11 cities had risen 1.8% in June from a year ago. That is the slowest since a 0.3% of a gain in October 2009. Vancouver prices, however, dropped 2.8%, basically the 11th straight decline for them. And the Toronto, basically the largest city across this land, had a 3.6% gain. Again, the slowest that's been in basically 4 years. Basically, policymakers would point to the fact that this is all supporting what they are doing, in the sense of that Canadian households are listening to the warnings and that they are moderating their mortgage spending, and that's all good news. These figures, though, are a little bit of a contrast, well, to a degree a contrast, but also support the numbers that came out last week that also showed that new price home gains had also slowed. The surprise in all of that last week, as I shared with you, were the record permits issued for multi-unit housing and a smaller than expected decline in the housing starts overall. So that was the good news. The 12-month gains in the TerraNet figures have been slowing from a peak of basically 7.1% in November of 2011. The index, which was set at a reading of 100 and began in June 2005, climbed to a record 157 in the report that just came out, meaning that resale prices have basically increased 57% over that time. So that was the benchmark. It started at basically 100 was being level back in June 2005. So if we look at it, that was 57% gain. Prices rose to record highs in 6 of the 11 cities that were measured. And while home sale activity, basically has strengthened in recent months, this will be put to the test. However, a lot of economists feel with the recent rise in interest rates and to see what mortgage rates, what kind of impact they'll have long term. However, these guys are basically saying the same thing a lot of the other economists are saying, that they expect that home price inflation will remain subdued, and it's not going to be anything rampant. And they also are pointing to that modest, basically that slowing down, that gentle landing, and basically saying that, you know what, at this point, the way they're looking at it in the crystal ball is that the market itself seems to be relatively stable. House prices don't seem to be plummeting off the planet. And if we look at it overall, we're still a lot stronger than we were years ago. And the report also showed that home resale prices rose 1% overall on a monthly basis. So again, certainly not bad numbers, not in the wake of what people were predicting a year ago, even a few months ago, of it being a catastrophic drop. So again, we will see where all of this goes. The beauty is that we get to read all the tea leaves, we get to point to all the winds and all these different things all the time and analyze them and see what they're doing. But bottom line for now, it would appear that, like I said, prices are moderate, some declines in some areas. Housing starts seem to be holding their own, resale seems to be holding their own. So, hey, steady ship keeps going forward, even in spite of the recent mortgage rate changes, and we'll see what impact that has when the August numbers come out, because obviously July hasn't finished yet. Anything you need mortgage-wise, let us know. We're always ready, willing, and able to help at the Auxilium team. Anything, like I said, purchase, refinance, whatever your needs may be, give us a shout. We look forward to assisting you, and hopefully you'll get a chance to get out there and enjoy the sunshine wherever you are today.